Good afternoon and welcome to another edition of African Economy. I am your host, Wang Fon Walter. Now the top stories. Africa becomes Japan's new frontier with investment plans worth billions. Angola sees output fall below 1 million barrels since OPEC exit. Ethiopia intensifies fight against illegal sale of its stolen relics. Plus, South Africa-led index rises in June. South Africa is preparing to open its first new underground gold mine in 15 years, a rare development in a country that once led the world in gold production. West Wheat Mining Limited plans to begin outputs next year at its Kala Shallows project, located on the western edge of Johannesburg, the city built on the back of the 1880s Witwatersrand gold rush, according to reports by Bloomberg. The $90 million project is projected to produce about 70,000 ounces of gold annually, modest by global standards, but a rare boost for South Africa's struggling industry. Still in South Africa, the composite's leading business cycle indicator in South Africa rose by 0.4% month-over-month in June 2025, following a 1.3% decline in May. 3 of the 7 available components contributed positively, led by faster growth in real M1 money supply and higher US dollars-denominated export commodity prices. And while the main negative contributions came from a narrower interest rate spread and weaker passenger vehicle sales. At the same time, the composite's coincident indicator increased by 0.5% in May, supported by higher industrial production and greater utilization of manufacturing capacity. The lagging indicator advanced 1.0% in the same month. In the meantime, South Africa is weighing plans to lower the entry threshold for its high wealth tax unit. The move would expand the oversight of the country's richest citizens as the government seeks new ways to strengthen revenue collection. The South African Revenue Service, SARS, currently monitors taxpayers with gross asset of at least 75 million rand, an equivalent to $4.3 million through its high wealth individual HWI unit, according to a Bloomberg report. The group, which includes founders of listed firms, executives, trust and family offices, more than doubled to 4,084 taxpayers by March 2024, 3 years after the unit was launched. That number, however, remains well below private sector estimate. As the clock ticks towards the expiry of the African Growth and Opportunity Act, AGOA, Kenya and the United States are intensifying negotiations over reciprocal trade agreements that could reshape the future of the economic partnership. The talks come at a critical moment, with Nairobi seeking to protect its key export and expand market access, while also capitalizing on President Donald Trump's recent decision to spare Kenya from the steep tariff hikes imposed on many other nations. For over 2 decades, AGOA has offered African countries duty-free access to the U.S. market, boosting industries from textiles to agriculture. But with Washington signaling a shift towards bilateral deals, Kenya is positioning itself as a trailblazer on the continent, seeking to secure market access, even as new tariffs threaten to undermine its export. If concluded, the new agreement is expected to strengthen Kenya's export prospect and attract greater investment from American firms. Responding, Ambassador Greer welcomed Kenya's efforts to rebuild and advance a mutual trade pact, emphasizing that the U.S. was committed to fostering a stronger, more balanced trading relationship with Nairobi. Even while hyperinflation is still prevalent across the continent, several nations have made remarkable progress in controlling the price spikes that afflicted their economy during the epidemic years. These inflation recoveries are vital for people, companies, and entire economies. The price of food, gasoline, housing and transportation starts to level off when inflation substantially decreases, giving those with limited funds some breathing room. Rebounds like these immediately raise living standards and lower poverty rates in economies within the sub-Saharan region. For government, lower inflation reduces pressure on central banks and allows for more prudent budgetary planning. With that said, here are the top 10 African countries with the best inflation recovery from the COVID-19 year to 2025. Top on the list is Zimbabwe. The inflation rate as of 2020 was at 557.2%, and this year is at 92.2%, with a difference of 465%. The second is Sudan, with an inflation rate as of 2020 at 163.3%, and inflation this year is at 100.0%, with 63.3% difference. The third is Liberia. Fourth is Guinea. The fifth is Democratic Republic of Congo with 11.4% inflation rate as at 2020, and the inflation rate this year is at 8.9%, a difference of 2.5%. Sixth on the list is Zambia with 15.7% inflation rate as at 2020, and the inflation rate this year is at 14.2% with a difference of 1.5%. Kenya is the seventh on the list with 5.3% inflation rates as at 2020, and the inflation rate this year is at 4.1%. Eighth is Equatorial Guinea, ninth is Benin, and the last is Rwanda. In its latest move to expand its footprint in Africa, Japan aims to raise $1.5 billion to pour into Africa's green initiatives. According to the Ministry of Foreign Affairs, the funds will be raised by the Japan International Cooperation Agency in collaboration with private investors. Impact investments, which aims to generate profit as well as demonstrate social and environmental benefit, has grown in popularity throughout the world. The Global Impact Investing Network, GIIN, estimated that last year the industry generated $1.57 trillion in assets under the management worldwide. The increase in interest reflects a larger economic trend. Takehiko Matsuo, Japan's Vice Minister for International Affairs at the Ministry of Economy, Trade and Industry, said in May the country's recovery from 3 decades of deflation has rekindled the private sector's appetite for risk, with an eye more on African rates as their corporations are already increasing the presence. Ethiopia has been intensifying its efforts to recover irreplaceable cultural artifacts plundered from the country at the height of the colonial era. According to Abebo Ayaliu, Director General of the country's Heritage Office, Ethiopia has already made great strides with numerous items successfully repatriated in recent years. Ayaliu revealed that Ethiopia has sent a complete list of plundered items to the United Nations Educational, Scientific and Cultural Organization, UNESCO, to enable international collaboration. Dedicated teams are also striving to locate historical artifacts now held by international institutions and private collectors. In circumstances where such products are on the market, Ethiopia has taken legal action to prevent its sale at international auctions. The government of Japan has designated 4 cities as official hometowns, for residents of 4 African countries from Nigeria, Tanzania, Ghana, and Mozambique, offering special visa scheme. The concept is similar to Chinatowns or Little Italys in the United States. Under the initiative, the Japan International Cooperation Agency has assigned Kizarazu in Chiba Prefecture as the hometown for Nigerians, Nagai in Yamagata for Tanzanians, Sanjo in Niigata for Ghanaians, and Imbari in Ehime for Mozambicans. Announced on the sidelines of the 9th Tokyo International Conference on African Development TICAD 9 held in Yokohama from August 20 to 23, 2025. The initiative forms part of Japan's strategic efforts to strengthen bilateral ties with African nations, promotes cultural exchange and address labor market challenges arising from its rapidly declining population. Director of Information at the State House, Abiodun Oladunoje, confirmed for the Nigerian side that the partnership will include a special visa category for highly skilled, innovative and talented young Nigerians wishing to live and work in Kizarazu. Artisans and other blue-collar workers willing to upskill will also benefit from the special dispensation visa. We will go on a break, and when we are back, African Economy continues. Stay tuned. Thank you so much for staying tuned. It's still African Economy, and I have been your host, Wangfon Walter. Now to the rest of the stories. The Democratic Republic of Congo's new central bank governor set out to rebuild confidence in the Congolese franc and curb the nation's heavy dependence on the US dollar, which accounts for nearly 90% of local transactions. According to a report, the economy is heavily dollarized, with commodity export and everyday transactions dominantly using the US dollar. Andre Wamaiso faces a daunting challenge. Many Congolese still recall the hyperinflation of the 1990s, while the franc remains highly unstable and is now trading near record lows against the dollar, according to a Bloomberg report. Congo earns almost all its export revenue in dollars from copper, cobalt, oil and gold sales, and the greenback dominates daily life, from rents and restaurant bills to airport fees. Even government wages paid in francs are often swiftly converted into dollars for security. African nations are emerging as significant players in global trade, featuring among the fastest growing economies, according to the DHL Trade Atlas 2025. The growth is largely driven by rising demand for natural resources, agricultural commodities, and shipping, coupled with regional integration effort. Sub-Saharan Africa's trade is projected to grow at a 5.3% compound annual growth rate from 2024 to 2029, despite rapid growth. Challenges such as reliance on raw material export, high logistics costs, and climate shocks persist. The report highlights the rising prominence of these countries as key hubs for international trade and investment, while major economies such as China and the United States continue to dominate overall trade volumes, contributing 18% and 14% respectively to global trade growth over the past 5 years. Countries including the Democratic Republic of Congo, Zimbabwe, Liberia, and Cote d'Ivoire recorded double-digit trade growth between 2019 and 2024, driven by rising global demand for minerals, agricultural commodities, and shipping services. With that said, here are the top 10 fastest growing trade nations in Africa. Top on the list is the Democratic Republic of Congo, and the growth rate as at 2019 and 2024 is at 16%, and the rank as 122nd. The project rates as at 2024 to 2029 is at 10%, and the key drives are copper, cobalt, exports, critical for EV, batteries, and renewable technologies. Second is Zimbabwe, third is Liberia, fourth is Cote d'Ivoire. Let's go to the next view. Next is Rwanda, fourth is, the next is Guinea, the next one is Tanzania, next one is Togo, and finally Zimbabwe. Let's look at the US dollars against other African countries' currency. The US dollars against Nigerian naira is at 1,535 naira beg your pardon, and the US dollars is falling against the Nigerian naira at 1.90, indicating a negative 0.10%. The US dollars against South African rand is at 17 rand, indicating that the US dollars is gaining against the South African rand at 0.044. The US dollars against Zambian kwacha is at 23 points, indicating that the US dollars is falling against the Zambian kwacha at 0.13 points. The US dollars against Egyptian pound is at 48 pound, which shows that the US dollars is gaining against the Egyptian pound at 0.09, I beg your pardon. The US dollars against Algerian dinar is at 129 point, which shows that the US dollars is gaining against the Algerian dinar at 0.236, indicating a 0.18% against the Algerian dinar. The US dollars against Angolan kwanza is at 9.18 point, which shows that the US dollars is gaining against the Algerian dinar at 0.00%. Declining South African mine output is contributing to the structural deficit in the platinum market, and the situation is not likely to improve soon. Platinum demand outstripped supply for the third straight year in 2024. Platinum offtake outpaced supply by 995,000 ounces last year. That was 46% higher than forecast. The World Platinum Investments Council projects another market deficit of around 848,000 ounces in 2025. Above ground stocks of platinum fell by 23% in 2024 and expected to drop another 25% this year. A drop in South African platinum outputs, particularly in the Western Limb region, is a significant factor in the declining global platinum supply. The Western Limb accounted for 61% of global platinum output in 2010. Lastly, on African economy, Angola's crude oil production dropped below 1 million barrels per day in July, the lowest since March 2023. Outputs fell to 998,757 barrels per day, according to data from the National Agency for Petroleum and Gas, ANPJ, missing the government's projection of 1.7 million barrels. The decline threatens to undermine revenue targets as oil prices trade below the $70 per barrel benchmark set in the 2025 budget. The Southwest African nation, which quit OPEC in 2023 after clashing with the group over quotas, has been working to sustain outputs above the million-barrel threshold, according to Bloomberg. Officials are now weighing financial support from the International Monetary Fund, IMF, though no formal request has been made. That brings us to today's edition of African Economy. Thank you so much for watching. I am Wang Fon Water. Good afternoon.